Hello traders, my name is Francesco, this is FreeFX. Welcome to my latest video. It's been a few days now since my last. There's been a lot happening actually, so I wanted to kind of touch base with you about this. The disclaimer for today is the same as always. Remember that I'm not a qualified financial analyst or cannot really sell you anything, so really it's just FreeFX analysis. This is my topic of the day. It's EUR heading up. So I want to discuss really the situation because I've been really trading this for a few weeks and months, and obviously we're into the September expiry contracts at the moment, and we can see that we've had a tremendous rise in the euro in the last few weeks and months. And I just want to kind of show you the latest kind of up-to-date action. And if we can sort of look at the FX futures hourly chart and see where we're at. A tremendous boost today, really early hours in the Chicago opening, and lots of buy, also sell, but ultimately this has not in a way diminished the results because we've seen a few candles on the up in the last couple of days, and really we can say that with confidence we have now broken 119 after a long lull around 118. So this kind of volume on the break of 119 gave us the confidence to kind of go forward, and then we've had this tremendous stop near, not quite at 120. So we settled just below 119.50, remembering that spot FX and FX futures have slightly different numbers sometimes because they're kind of lagging. Spot is ahead. So just closing that for a moment, I just want to show the open interest heat map again from CME Group for EUR USD, and we discussed how it slipped down from 120, and now we're back to the full range is available. We can see we have contracts spanning from 117 all the way to 124 and above, and really you can see the kind of hard green numbers there. We have over 2k for 118, 118.15, 119 and 120 as well. And so further down the line it's sort of less, but really these numbers are quite strong. So the 119 has come to pass, it has picked up beyond that, so the next really interest is at 120 to buy. So we'll see how that develops, but certainly 120 is within reach again, and we can see whether this time is the right time for it to go beyond. I also wanted to show you Daily FX. Now Daily FX is powered by IG. Formerly Daily FX was the research branch of FXCM Capital Markets. Now it was sold to IG, so same staff, same approach, same website, etc., just the rebranded version, and uses TradingView to power its charts. So we could have just opened TradingView, but just wanted to use another historic kind of website to in a way highlight its presence. And again, you can see the chart here, tremendous rise from this kind of stalling 114 in July. We picked up, we gone and stopped around the end of July at 119, and then we came back down to below 118, and now the last few days has been, what's really interesting if you ask me, is that we had these straight candles, 1 2 3 4 5 straight rise from the 12th of August, so a straight buys right through. And of course this is an indicative version of the reverse, which with it the Dixie is the dollar index, it would be a mirror version of this. So obviously the dollar is steadily falling. We don't really have any reasons for this. Of course, there are lots of things if we want to go and investigate. I talked in the last video about the long-term channel with the upper, the roof basically at 118 is a 12-year channel, and the Fibonacci retracement also 118. Gone beyond that, whether we are actually going to break that consistently. What I would say is, given that was a monthly channel, I would go to something like the weekly and see how we finish the candles. You can see that there have been two, one doji there and one candle with a long wick there. below 118, and we've gone beyond it. And we need to see actually to confirm whether we've broken the long-term downtrend channel if we have a close of this month above 118. So that's the long-term trend channel. So put it out into the pop-up window, and you can see that you don't have to really draw it again. I don't have to draw it again for you, but you can see this line coming down here, and we just broken that 118. Now, I say always that these numbers are elastic, so you could draw it in different ways. If you wanted to do a parallel channel again, I can show it to you now, and it's basically something that looks like this. Got that, and you can draw it in different ways. You can draw it on the close of the monthly candles or on the highs, and then you can sort of do that, and you can see where I'm at. So that's basically the parallel channel there. And obviously, we are where we are in terms of the actual numbers. That is the, just to extend it a little bit more. So, if you draw it like this, then we are still within that, and this number would be sort of 120, 50, and so we're still within that. If you drew it more sloping, touching the high of 2011 there, then obviously that wouldn't be true to the start, 2009, then we'd be a bit closer to that. But anyway, so you can draw it different ways. I think this is probably the more correct way, so that it touches basically all three points here, and then it comes to that. If you look at it like that, we are kind of still within that channel, so okay, let's not sort of beat around the bush and close that. So my last video is where do we go from there? Do we go past 118 or bounce below it? I think it's still early days. I think 120 is still a formidable kind of psychological number, because it's 110 is a big number. 120, if you look at 110 here, back in 2002, there was a lot of activity there, several months before it kind of picked up, and then sort of around I think I got that slightly wrong. I meant 1.0, so 1.0, that's parity. What I meant was 110 is actually up here. Yeah, it's here, 110. Yeah, still lots of activity around here at 110, and we've had 110 a lot here as well. It is a significant number. We've definitely left it behind. 120 is the next big number, and you can see that 120 has served as support 2012, 2010. So it is a round number, so we'll leave it at that. Move on. Wanted to show you the calendar as well, and there's not a lot happening. We have the FOMC Federal Monetary Committee, and basically we need to see what they're going to put in the minutes, to see what was discussed in the last Fed meeting. But I don't really see much in terms of forward guidance or any surprise. It's a high impact event as always, and that's tomorrow at 7 o'clock. But I don't think it's going to be particularly market movement. Anyway, I shall stand corrected. And then we have jobless claims Thursday and other such things. But that's the calendar. If you look at the fxstreet.com website, it says that highest level in 2 years, and that's fairly true. Anyway, nothing really there explaining why this, but we can certainly use that sometimes to kind of explain certain sudden rises. Certainly, so the numbers are looking good for the euro on the upside. I just wanted to give a shout out as well to a website called Not the Noobs. This is a trading forum, and it has a very short life. It's not really been long, and it's been up, and quite a bit of activity there, and some nice sections there just to meet sort of like-minded people who are trying to understand trading, etc. But I just wanted to give it a shout because it's a free website. It's very good, and it's been up and going for a few months now. And so if you want to give it a shout and sort of have a look at it, it's got a few nice sections about FX trading, and guide to forex is pretty good there. So so I would just close my video there, and just want to say that what we're looking for obviously is how to go from here. We don't know obviously whether it's going to be a 120 break tomorrow with the FOMC minutes. So, trade defensively as always and take care of yourself. See you in my next video. Ciao.